Good weekend, all. Ira Epstein with your financial market wrap-up, your weekend edition. And this edition is for Friday, the 2nd of September already, 2022. Happy Labor Day, all. Remember, you got abbreviated trading session and futures Sunday night and Monday, and then we start getting back to normal Monday night into Tuesday. So it'll get very interesting. I've told you a bunch of things in the market, but before we get too far, let me get to today's event, all right? There were a couple of them. The first, the Russians have done it again. They pulled the plug on opening the Nord Stream 1 pipeline. They were supposed to open it as of, if I'm correct, tomorrow. 3-day shutdown, Wednesday, Thursday, Friday. Now there's technical glitches. Well, guess what the technical glitch is? They watched the G7 get together today and declare they're going to put caps on what any of the members that are in that and affiliates of it that will adhere to it will pay Russia. So if I'm Russia, first thing I'm saying, something you can cap all you want. I'm not going to sell you at those prices. So don't worry about it. I don't need to do business with you. Second thing, that means that Western money will not finance the ships, though. For the insurance and the like, they won't be able to go another route. They have China. They have India. They've got plenty they can do. So what's the retaliation mode? First, they'll go, do whatever you want. I don't have to sell you my oil. Next thing is, I just don't get it. But Nord Stream, we thought it'd be back up tomorrow to help you, but it's got a technical issue. The technical issue is, let me stick it to you. It's pretty simple. Okay. That's going to be an important issue. On September 5th, you have OPEC coming up. Be very careful of that, okay? It wouldn't surprise me if they decide to cut production. Why not? The world needs less. We're all going into recessions of one type or slowing of economies, whatever you as an academic want to call it. And then we have something else. We had today the big report, the non-farm report. So we had 315,000 jobs. The numbers I saw, they were looking for 298, but that was a Bloomberg number. It doesn't matter to me. So I look at the number from there, see what they expected. It can play accordingly. The next thing that I see is what happened with the labor force participation. I'm sorry for that, but I want to keep going here. And on the labor force participation, 800,000 people approximately came back to the workforce. You have more people now looking for jobs. Well, when you get more people looking for jobs, that's an interesting factor. Think of me, Ira, as an employer, and you, XYZ, come and apply for a job. And then your friend before you is ABC. I'm looking at the two of you, you're both applying, you want it, and I'm going, okay, I was going to pay $25 plus I was going to give you some benefits. Can I get these guys on board for 21? Let's just see. I'm going to offer you 21, 22, whatever the number is. The first guy says no, but the other guy, he wasn't here before, he just joined the workforce. Maybe he says yes. Now you'll say to me, that drops inflation. I'm not sure I know that does it. What if the rest of my people were getting $22 an hour? All it's become is sticky. I certainly can't go into my factory and say to 50 people, folks, things are rough. We got to take you down 10%, everybody. I'm sorry, but that's how it's going to be. You could do that. They will likely quit because they're going to be able, at the same pay or maybe a little better, hope they can get it. But the more people you bring into the workforce, the more you take that away. So there's going to be a number as people keep joining where it gets sticky. In other words, it doesn't go up, the price pressure. It falls a little bit, but it also gets sticky. I mean, there's a number you won't be able to hire people under. The other thing that's going to happen, I believe, that I can't prove this, August is notorious for the wrong number. Why? People go away on vacation. So if you read the government, not me, I read reports what it is, it's notorious. They have the lowest participation rate in telling you how many people they were hiring since 2006. I have to think that means a number of those people are going to get their next report for the September. They're back at work at that point. They're going to adjust their number or fill out a form they didn't fill out maybe back then, and we're going to see a jump, a revisionment jump. It's my guess. I don't know it. The odds favor it. I like the bet on that. So that is another part. So if you think that As we hire more people, that helps the Fed. I don't. I think that the Fed, like the participation rate, I think they're going to hate that number is going to go up. The beauty is, this is September. The Fed doesn't get to see that until after they make a decision on September 21st. Okay, just a little bit of bringing you into what's going on. So now let's go to the chart action. For the E-mini S&P, we're staying down. The market down for the week, 0.81%. Not a huge decline, but a decline. By the way, that's for the month so far. I did that wrong. That, my friends, was the monthly chart. And you're down 0.81. You're only 2 days into the month. So that's not a big deal. When we come to the weekly, though, you are under the weekly, so the bias is down. And for the week, you lost 3%. Now, the day started out like gangbusters. I can tell you what I told my traders. And at 5:30 in the morning, I told them, I have a feeling I'm going to be putting out a special update to go short markets right after the jobs data. I put out a special report. I did it, I think at 7:47 this morning to go short the S&P. I had a heck of a nice day going home. On the S&P, as you can see on the weekly chart, you're near the low of the week. The market's got higher lows, higher highs. When I look at what's going on here, the market's staying under the 18-week average. It tried to stay over the 100. We've had this hellacious rally since June that carried all the way up there. And I thought the market was making a trading top because I think that the market was looking on the dailies at the 200-day moving average, the upper Bollinger Band, and I pointed that out to people, and I think that's what the market was getting up here into its resistance at, and it's turned out to be right. You haven't turned into a downtrend. So if you think I'm telling you you're in a bear trend on the weekly chart, I'm not. The daily chart looks a lot different than this chart. You've got to balance the two for where you're at. So now is the market going to fight a battle? Well, where do you think it would fight a battle if it wants to get friendly? It would go back to the 18-day average, 40.06.5, and do its battle there about 80 points higher, round figures. Momentum is down. The bias is down. How do you determine bias? It's the simplest thing in the world. My rule of thumb, I look at wherever on a weekly chart, the 18-week average is. If the market is under it, bias is down. If the market's over it, bias up. What do I use that with? I use it with my swing line. If my swing line is flashing out new buy signals and the bias is up and momentum is up, it's a go signal. How much risk is involved? I mean, there's other factors you look at, but it's that simple. But if I have a market that's in an uptrend on the swing line, but the bias is down and momentum's down, no. The parts of the puzzle don't fit together. I walk away. In the Dow, same thing. The market, as it turns, peaked out between the 100-week average and the upper band. And again, this is the first week back underneath that the 18-week average of closes, which tells me if you rally, look for the resistance at the 32,052 level. So that from here to get up there is going to be 700-point rally. That's a heck of a rally, but it can happen. Nasdaq, the top was made at the 100-week upper band. What do I teach in my enhanced Bollinger Band course? If you've bothered taking that, and I begged you to do it, classic case where you're coming out of long positions on a weekly chart. I didn't say bearish, coming out of long positions. That's what I teach. First time you hit a Bollinger Band, you're coming out of short positions, long positions. If it's embedded, you're staying with parts of the positions. I always teach that you're trading more than one contract at a time in multiples. If you can't afford it, go to the mini contracts or the micro contracts. But do that. That's the way that I believe it should be done. In any case, momentum down, bias down, trend up, and you ran into your problem area. In the Russell, same pattern. Momentum down, bias down, trend up, went to the upper Bollinger Band. I think the pros came out there. But in all of these markets, you still have the swing line up. It's going to take a new pattern to turn it down. Even if you straight crashed, you'd end up with a higher high and lower low. There's nothing on the pattern of the swing line that can turn bearish on any of these markets just yet, which I find fascinating. We then go to the 30-year bond. What do I teach? Just now, First time you hit a Bollinger Band, what do I teach the pros are going to be doing? That's where they're covering shorts. What did they do up there? That's where I teach they're getting out of longs. This is so simple. 13 chapters. You watch, you learn, you start applying it, your eyes are going to go like this. Why didn't I ever see that before? And it's right in front of you. It's not just this. It's learning how to work with the slow stochastic. They tie together. They're very important. The way I teach it, one does not work with the other. 10-year note. You went from the upper band. This week you hit the lower. No. I went to tell, if you were sitting next to me, hey, Ira, should we go short? I'm saying no. You don't sell Bollinger Band bottoms. Dollar index. You don't buy Bollinger Band tops. This is an area to be coming out of longs. You're not embedded. I'm not bearish the dollar. It's just not a place to get long. Now, could it just latch on and stay on that and go higher? It absolutely could. But if we embed, there's a way to catch that too. I wait for the parts of the puzzle to come together. And by the way, they can come together and I can be still dead wrong the market, okay? Nobody walks on water. Never seen it. I see people say, I'm this. Their track record, yeah. Show it to the government. Let's see if that track record holds up. Euro, higher high, lower low. Now, I think Europe's in serious trouble. Between oil, they're going to be raising interest rates. They don't want to. Ms. Lagarde's forced into a minimum 50 basis point hike. I can just read it. All her little elves that are with her on her committee. It's going to be the case. They might even go for 75. They've got energy problems, and Russia's putting the screws to them. Every time the G7 thinks they can do something to Russia, they're just angering Russia. And since Russia has the oil, they know how to use it. And that's what they're doing. Canadian dollar, no trend. Higher high, lower low. One more time. You hit the Bollinger Band. Have you been hurt by not getting short under the Bollinger Band on any of these occasions? You have not. Japanese yen. So today, interesting, the governors are saying they're turning their attention to the currency market. Guess what Ira takes that to mean? Good time to no longer be short. And oh my gosh, you're down to the Bollinger Band for all purposes. Cover your areas. When a governor tells you that, it means you could wake up at any point and they're changing a policy and you'll get a jump on it. Walk away. That was the news today there. In Bitcoin, I was telling traders they can go short this. And you can see what's going on. Why do you want to own gold? Why do you want to own Bitcoin when the Fed is saying they're going to fight you every tooth and nail? These markets, to a degree, rely on either the stock market going up or inflation. We've had inflation. You're now at the point where the government's here to beat it back down into the genie bottle. I realize you're all looking for the bottom. Why? This has just begun. I'm selling the opposite. I'm looking for opportunities as a trader to be on the side of the Fed, not fighting the Fed. TV is full of the guys fighting the Fed. Well, I don't know that they'll have the stomach for it. They'll have the stomach for it until they don't have the stomach for it. He just announced a week ago at Jackson Hole what he's going to do. You honestly think he's changed his opinion? He's got a legacy to leave. He's not going to be a Fed chair again. So this is it, baby. What's my legacy? And it's going to be I'm the guy to put inflation back in the bottle. Worked really hard to do it, okay? He doesn't want to be a failure on it. Brent versus WTI. Interesting. So if OPEC cuts production, and I don't know if they will or won't, do you think that spread comes together or widens out? I would think it would widen out. I'm not saying to do anything here, but it's on the back of my mind already, maybe to the forefront of my mind. Let's get over here to Brent. So we had gone up, came down. Each time we've hit this Bollinger Band, we seem to bounce away. It refuses to embed. There is no trend. You have a higher high, lower low. WTI, higher high, lower low. Look for support on breaks into the lower number. Now, logic tells me if the economy is going to slow down, that just the way that I predicted gasoline prices were going to fall, I did not predict they'd fall 80 days in a row. I thought they'd peak out on July 4th holiday, and I told you forget about it, and I did it here. Go to my videos. A week ago, I said, nah, you're not going to get that driving pressure to kick up Labor Day. It isn't going to happen. Kids had to go back to school too early because of COVID, that all the school they missed, and blah, blah, blah. I was right. And you're taking that down. Well, I'm wondering if oil isn't the same story. And that's why OPEC Plus wants to meet and curtail it, because they're smelling that if these economies slow down, do they really need it? And their big buyer, China, if they start locking down cities again, just how much oil can they accumulate? And do they think $92 Brent is a bargain price? Another issue, China is buying Russian oil at a $20 discount. Nobody wants to talk about that in OPEC, but that's what's going on. Rebob gasoline. Okay, for Ira, I'm done. This is where I think the pros step in right now. I think they're covering shorts. Maybe you go a little further down here. I don't think materially further. I am not bullish. I think that all the money on the bear side, the easy money, is done and over. That's what I think when you get to those type of numbers. Now, I like to stick my neck out a lot, and I do it in my research. So I've got a Labor Day sale for you. If you've been waiting and saying, hey, I'll wait for Ira to pick up in the fall and I'll take his subscription. For 4 days, from now through the 6th, then it's over. 50% off of any of my research. So you can buy 1 month. Typically it runs $7.95 for my morning futures video, $8.95 for the Spider ETF. You can buy 1 month of my full research. It'll be 50 off, or you can do it on a yearly basis, 50 off. Only during this time. It is limited to new and returning customers. It does not apply to any of my courses. Now, for my returning customers, I'm coming out with new course on outside days. Only my existing clients get a discount on that. The people watching this won't get a discount on that. Everybody gets something from me, and I try to be really fair on this. So that is how we're going to do this. But the bargain, you buy the 1 year. You buy it, you're sitting there, the price like $156 for the morning video, and it's half price. Come on. How bad can it be for 24 videos a month for 12 months to get that, each averaging 15 minutes to 20 minutes? I think you'll find it something to learn with, another way to look at the markets, and I do it in the Spider ETF, the futures market. We have combo packages. Take a look. How do you do this? Go to our website, iraepstein.com, under the word research, or you can follow me with my finger. I'll go over my head here. There'll be an icon. Move your cursor up there. You'll see it. Give it a click. It'll take you right to the area you have to be. You have a great Labor Day. I will see you all Tuesday. Take care.